Welcome back to the channel, finance enthusiasts. Today, we're diving deep into the world of ASML Holding, the tech titan that's been making waves in the semiconductor industry. But is it worth your investment? Let's break it down with some exciting metrics and see what makes ASML tick. First up, we've got the PER TTM, or price-to-earnings ratio trailing 12 months, standing at a hefty 55.80. To put that in perspective, the average over the last 5 years has been 43.75. Now, looking forward, the PER FWD drops to a more reasonable 32.71. What does this mean? Essentially, investors have high expectations for ASML's future earnings, but the stock might still be a bit pricey compared to its historical average. Next, let's talk about the PG ratio, which is sitting at 2.27. The PG ratio helps us understand the price of the stock relative to its earnings growth. A PG above 1 typically suggests that a stock might be overvalued, but considering ASML's impressive growth rate, this isn't necessarily a red flag. What about insider ownership? It's a tiny 0.06%. While this might seem low, it doesn't mean insiders don't believe in the company. It just means the stock is widely held by institutional investors. Now let's get into some juicy profitability metrics. ASML boasts a whopping return on equity of 60.35%. That's right, folks, for every dollar of equity, ASML generates over 60 cents in profit. The return on assets is an impressive 19.18%, and the return on invested capital is a staggering 48.73%. These numbers scream efficiency and profitability. Earnings per share or EPS currently stands at 18.86, and it's expected to grow at an incredible 24.62% per year over the next 5 years. Over the last 9 years, ASML's EPS has shown a very positive evolution with a compound annual growth rate of 23.44%. That's some serious growth power. Continuing, free cash flow per share has had a bit of a rocky ride over the last decade, leading to a CAGR of 16.49%. It's not as consistent, but still solid enough to support long-term investment. Dividend lovers, rejoice! ASML offers a modest dividend yield of 0.61%, but here's the kicker. The dividend has grown at a CAGR of 22.74% over the last 10 years. Talk about rewarding shareholders. When it comes to margins, ASML is crushing it. The operating margin is a strong 31.52%, while the profit margin is an enviable 27.23%. These numbers show ASML's ability to turn revenue into profit efficiently. ASML has seen very positive revenue and earnings growth over the last 8 years. This stellar performance is reflected in its market price, which has outperformed the VOO, Vanguard S&P 500 ETF, over the past 5 years. Let's talk about debt. ASML's debt-to-EBITDA ratio is a low 0.50, and the debt-to-free cash flow ratio is 1.79. These numbers suggest that ASML is managing its debt well and has enough cash flow to cover its obligations. In terms of stock performance, the average price return over the last 52 weeks is a spectacular 46.1%. ASML's market cap is a colossal $400.90 billion. But what about its future price? Analysts predict that in the next 12 months, ASML's price will be around $1,031.60, which is slightly lower than the current price of $1,052.47, a downside of 1.98%. And here's an interesting take. Our analysis suggests a fair value of $668.30. That's quite a bit lower than the current price, implying a potential overvaluation. However, if ASML achieves an EPS of 22.5 next year, we'd still be looking at a PER above 30. So, there you have it. ASML Holding is a powerhouse with strong profitability and growth metrics, but it might be a bit overvalued right now. What do you think? Is ASML a buy, hold, or sell for you? Drop your thoughts in the comments below. And don't forget to like, subscribe, and hit that notification bell so you never miss an update on the hottest stocks in the market. Until next time, happy investing!